Hello everyone, welcome to Betty Academy where we make school easier. Please support this channel. Subscribe, watch, like, share, comment down below, hit on the notification bell. So in this lesson, we are going to learn about money market and the capital market. What are the differences? Just an overview before these are the basis of comparison. This is what I'll be looking at. But before then, let's just have an overview of what a money market and capital market are. So both the money market and the capital market are two different types of financial markets, where in the money market it is used for the purpose of short-term borrowing and lending, whereas the capital market is used for the long-term assets. So money market and capital markets are types of financial markets. So both of them are types of financial markets. Money markets are used for short-term lending or borrowing. Usually the assets are held for 1 year or less, whereas capital markets are used for long-term securities. They have a direct or indirect impact on the capital. So capital markets, they include the equity market and the debt market. So generally, when you look at the equity market, we are looking at the shares and all that. So equity, from the term equity. And the debt market, these are loans and all that. These are markets where you borrow. Then it could be debentures, bonds and all that. Then money markets, they are unorganized markets. Their nature is that they are unorganized, where banks, financial institutions, money dealers, brokers trade in financial instruments for a short period of time. They trade in short-term debt instruments like trade credit, commercial paper, certificate of deposit, treasury bills, etc., which are highly liquid and can be redeemed in the period less than one. So when it from the term liquid, it means that they can easily be converted into cash. So trading in the money market is done mostly through over the counter. That is, there is no or very little use of exchanges. They provide businesses with short-term credit, and play a major role in providing liquidity in the economy over the short term. It helps the business and industries with working capital requirements. So from working capital requirements, these are the day-to-day running requirements of a business. They need to meet those short-term obligations. Then on the other hand, what is a capital market? A capital market is a type of financial market where financial products like stocks, bonds, debentures, they are traded for a long duration of time. This one is the opposite of the money market, where they trade for a short period of time. So they serve the purpose of long-term financing. So if a firm needs financing, this one, when they go to the capital market, they are able to raise that finance, and the nature of that finance is long-term. So they meet their long-term capital requirement. The capital market is a dealer and an auction market, and it has other two categories under capital market. So under capital market, we have the primary market and the secondary market. So those ones you find on the capital market, whereby the primary market is where fresh issue of securities are offered to the public. So if a firm is issuing securities, or rather floating securities to the public for the first time, such a market is what we refer to as a primary market. On the other hand, a secondary market, it's where issued securities, those ones that had already been issued to the public, those are the same securities that are being traded between investors. So they are not issuing to the public, but the securities are being traded between investors. So that one is a secondary market. So having gone through that one was just an overview of what a money market and a primary market are. So let's go through these particular points. So we have this particular table, and this one is a comparative table where it's helping us in comparing a money market and a capital market, and from there we should be able to know what is the difference between the two. So in terms of definition, we have a money market. I'm expanding on these points. So a money market, it is the part of financial market where lending and borrowing takes place for short term up to 1 year. So this one, it's basically it's part of financial market where lending and borrowing takes place for short term up to 1 year. On the other hand, a capital market, in terms of definition still, is part of financial market where lending and borrowing takes place for medium term and long term, right? I hope you are able to, we are together up to that point. In terms of definition, that's how you define the two. So in terms of types of instruments involved in a money market, yeah, these are the instruments that are involved. They generally deal with the promissory notes, bills of exchange, treasury bills, commercial paper, call money, etc. On the other hand, we have the capital market. Capital market, from the overview we said, they have what? They deal in both debt and equity market. So meaning that a capital market, they deals with equity shares, yeah, and the debentures, we have bonds, preference shares, etc. So in terms of the types of investors, those who invest in the money market, we have the money market. It contains financial banks, the central bank, commercial banks, financial companies. Yeah, those ones are the investors and the money market. On the other hand, under the capital market, it involves stockbrokers, mutual funds, underwriters, individual investors, commercial banks, stock exchanges, insurance companies. So those ones are the investors involved. In terms of the nature of market, yeah, from the overview, you remember we touched on the money market where it's very unorganized, in that we have the over the counter transactions happening. So money markets are informal. Capital markets are more formal. Yeah, Mark, you remember here you are dealing with long-term financing. So in terms of liquidity of the market, money markets are liquid. Yeah, so if you want anything, that the securities that you are trading in, they are easily convertible into cash. On the other hand, capital markets, they are comparatively less liquid. Yeah, so when you compare, it's relatively less liquid compared to the money market. In terms of maturity period, from even the definition, the maturity of financial instruments that is being traded is generally up to 1 year. Yeah, so any period between 0 to 1 year, that one falls under the money market. On the other hand, the maturity of capital market instruments is longer, and they do not have stipulated time frame. In that, you'll have that those securities and the instruments used, it's more than 1 year. In terms of risk factor, we are looking at the risk. How is that particular market? In terms of the money market, since the market is liquid and the maturity is less than 1 year, it means that the risk involved is low. On the other hand, the capital market, due to less liquid nature and long maturity, the risk is comparatively high. In terms of purpose, that one is not here. But in terms of purpose, under the money market, the market fulfills short-term credit needs of the business. So those short-term requirements, needs of the business, they are fulfilled under the money market. On the other hand, the capital market, they fulfill the long-term credit needs of the business. Yeah. Then in terms of functional merit, the money markets, they increase the liquidity of funds in the economy. Yeah. In terms of functional merit, on the other hand, the capital market stabilizes the economy due to long-term savings. So when you look at the return on investment, the return in money markets, they are usually very low. And on the other hand, on the capital markets, the returns in capital markets are high because of higher duration. So in conclusion, both are money markets and the capital markets, they are part of the financial markets, and the main aim of the financial markets is to channel funds and to generate returns. So the financial markets stabilize the money supply by lending, borrowing mechanism. That is, surplus funds are provided to borrowers by the lenders. So I hope up to that point you are able to know the differences between money market and capital markets. So kindly watch out for our next video and don't forget to subscribe. Until next time, goodbye.